Welcome back. Hope you're having a good morning. You're tuned into Bazaar Morning Call. Well, time to discuss a few of those stocks. We listed down the list, but there are a few stocks that we'd like to discuss. And to help us out with that, Siddhartha Khemka, the head retail research at Motilal Oswal Financial Services, joins us on the show. Hi, Siddhartha. Morning. Thanks so much for joining in. Well, Siddhartha, we listed down some stocks, and we'll discuss that in a bit. But yesterday, the big mover was Avenue Supermarts. There were some rumors of it potentially coming into the Nifty. It needs to get included first in the F&O market, then it could come in if that is the case. So we'll keep that aside for now till there's something official that's announced. But what's the view on the stock? You all have been quite positive on that stock post the recent correction. Tell us more.
Yeah, very good morning, Nigel. So I think, yes, the stock was in momentum because of the buzz around getting included. So you rightly said, yes, first it needs to get included in the F&O list. The company, the stock has been eligible to be included in F&O for quite some time, but we have not seen it get included. So I think that's the first step. If you look at the overall business, I think there was definitely some growth slowdown that impacted the overall business. And we expect that now, after having seen the growth slowdown, we believe that the company is well placed for an earnings revival. The strong footprint addition that they have done over the past few years, that should help steady in the coming quarters with the demand revival, with the margins now, with the raw material prices coming down and aiding the margins as well. So I think that should be good, especially for a company like DMart, which has consistently kept a good check on the cost control. And even on the terms of the new age competition from the Instamarts or the quick delivery e-commerce business, I think there is a huge room for business growth for both offline as well as online. And even in online, DMart has done its penetration and is penetrating there. So putting this all together and the recent correction, we believe that at 36 times EV/EBITDA and 58 times price to earnings on FY25, it is a 30% discount to historical multiples. And with the improvement in growth, we believe that the DMart could now start attracting premium multiples of about 40 times. So we upgraded the stock to buy recently with a target price of 4,200 with the expected revival in demand and growth, same-store sales growth for Avenue.
Right. There were huge volumes on Avenue Supermarts yesterday as well, nearly 2 times the average that we've seen on that counter. Siddharth, since you alluded to a lot of the new age companies and how Avenue is, competing against them in the Swiggies, Instamarts and all of that, let's talk about a few other new age companies. This month has been a good one for the likes of Zomato, a good one for the likes of Nykaa, delivery doing extremely well as well. What's your house view on all these new age companies? There is the Nykaa Analyst Day today. What do you think one should expect from that?
Mangalam, good morning. So I think within the new age, we have coverage on Paytm and Zomato. We are yet to start covering or have a research view on Nykaa. But if you look at the entire new age, these e-commerce companies, one thing has clearly come out is that the focus on profitability has sharply increased. And even in terms of delivery, in terms of numbers, that has also improved. So that is something that the market is liking a lot. We have seen how the stock of Paytm and Zomatos have run up from their lows. The companies have guided for an EBITDA break-even much earlier than they were guiding for. On an overall EBITDA basis, we are expecting Paytm and Zomato both to become EBITDA positive by FY25, including all the adjustments and costs that they have been excluding for now. But if you look at that, is something that is kind of heartening to see, especially for some of these names. So Paytm, we have a buy rating with a target price of 900. That is something that we upgraded. We initiated coverage 2 quarters back, and that is doing well. I think that is something that we like within the e-commerce space.
All right. Just hang in there, Siddharth. You might want to listen into this conversation that we've lined up on the show itself.
Siddharth, morning. That was really my question to you. Now, this is a new negative, not just for TCS, but for the IT part of the market and the market as a whole, right? Till now, it was only Infosys that was speaking of cancellations. TCS never spoke of cancellations at the end of fourth quarter. And here's a big one that's coming through. Would you be worried about this, or do you think the market will kind of digest this and move on? Because anyway, they're working 8 years out of the 10-year deal.
Right, so I think this is definitely a negative, at least to the sentiments for the IT sector in India. These kind of uncertain environment, which was being highlighted by a lot of IT players, but seeing these kind of large deals being cancelled, especially towards the when they are already running smoothly for so many years. Maybe there may not be a big financial impact for TCS, as you rightly said, 8 years out of 10 years, so they would get bulk of the revenue out of it, and obviously they have a huge order book to take care of the future growth, so doesn't impact the growth outlook much. But as you rightly said, yes, it is definitely a big negative sentiment. It clearly brings out the fact that how uncertain the demand environment could be, and on back of that, how much valuation are investors willing to give to IT companies, given that there's an uncertain demand, and B, there is not much growth that they are able to capture given this uncertain environment and delayed in decision making, especially in the US and European companies. So I think the sector could remain under pressure, but definitely long term, if you look at, we just recently had an analysis of the TCS annual report. The long-term outlook definitely looks good. There is a growing intensity towards driving operational efficiencies, optimization cost, but also there is an improved, you can say, traction towards cloud transformation, which has been a high priority area. And TCS, being the leader, has shown resilience in terms of leadership, market leadership, in terms of the margins, and in terms of costs. So I think bearing the near-term headwinds, I think over a long term, these companies would come out and would continue to do well.
All right. Thanks for that, Sid. We're going to come back to you and discuss more stocks. By the way,